Okay, so you've made the choice. Investing on the stock market it is. Well, and you've even looked into it. I know what investing in stocks actually means. Maybe you even tried to invest some money on the stock market as well and purchased a share in Tesla, for example. Well, the thing is, how does it actually work? Or what should I pay attention to? And what are all those kinds of different options that you could actually buy? Now, there are things like mutual funds, ETFs, Forex, cryptocurrency. My goodness. I know that I'm overwhelmed with all the things that I can invest my money in. I'll tell you this, I don't have enough money to invest all those things. And I thought I just wanted some shares in Tesla, and that's actually it. Well, this is what happened to so many people, thinking you need to know all the things about the things that you can invest in. Because in the end, there are so many things that we can put our money in. Well, to me, it's very simple. I'll tell you this, maybe because I also like simple things myself. The easier, the better, as long as I can make a stable return. My name is Lucas and I'm from excelwealth.com, and I'm very happy that you joined me today because in today's video, I would like to share with you the 3 steps to get started in investing and know how and which stocks to buy, the moment you want to get started. And no need to worry about all the other things that you can invest in. Since, you could even collect all the Pokemon cards and keep those for several generations and hope that they will grow in value. Now, if you have a Charizard, and I don't know all the Pokemon cards, but if you have one, dude, that's gonna give a lot of money to you. But okay, that's a whole different kind of investment that we're talking about. I think it's a good idea not to go down that route today. If you're new to the channel, don't forget to hit that subscribe button because that's the way you'll actually earn the badge of the XL crew member. Of course, if this is the first video that you're watching today, and that's totally fine to watch that. You gotta know this. This is the 2nd episode of the investing video series that I'm sharing with you. As I was explaining in the other video how to get started. Now in today's video, I will continue. What should I buy? And yes, there are so many options that you can buy the moment you have money to invest. Because, people always want to have your money to make more money out of that. And that's also a way to make money. But the moment you open an investment account through an online broker, you'll see you can buy a lot of individual company shares. For example, Tesla and Amazon. But sometimes you can even buy Forex exchange currencies. For example, like the dollar, or like a Japanese yen, or a British pound, or even a euro, which we use here in the Netherlands, of course. And of course, there's even cryptocurrency. And I'll tell you that's all nice, but what I love most is, of course, good and delicious food. I mean, index funds. We're talking about index funds. We're talking about investing. So I love index funds. That's also what I love. Now, I could see you thinking, index funds, Lucas? What is that? Well, before I go into index fund, let me quickly explain to you why I don't invest in all the other options that you could see, the moment you open your investment account. The reason why I don't invest, for example, in Forex is that Forex trading is, you're trading Forex exchange and not the ownership of a company. And for my research up front, I rather look into businesses than, Forex exchange, because the second reason why foreign exchange doesn't really work for me, it doesn't really raise in value over time. It does go up and down, but a dollar compared to the euro actually always stays rather stable. And therefore, for a day trader, that's totally fine. And you gotta use huge amounts of money to trade in Forex trading. As for stocks, totally different, and it grows over time. Now let's go back to the index funds. The second question here is, why index funds? Well, you have to see it like this. An index fund is literally like the word actually says it. There's the word fund, and there's the word index. No, it's not fun. It's not fun. It's fund with a D at the end, okay? So a fund is where investors will pool their money, and multiple investors could invest in the same fund. And then, of course, the fund would be managed by a dude called a fund manager. Now, this could also be a doodad, okay? And this fund manager decides which companies this fund actually invests in. Now, let's pretend that this fund has 1,000 investors, okay? So you're one of the 1,000 investors, and each investor puts in $1,000. That means that this fund manager will have the access to $1 million to invest. And with that investment, as a fund manager, I could choose like I'll invest 20% in Facebook, I'll invest 10% in Amazon, 10% in Zoom, and 10% in Apple, and 10% in Microsoft, and so on. You get the idea. This way, the investor, you who invest in a fund, has already got a variety of investments in their investment of $1,000. And at the end of the year, as a fund manager, I will take my own cut for managing the whole fund, which will be somewhere around maybe 1 or maybe 2%. And as a fund manager, I make my money by managing it. And the investor, you get paid because I picked some good variety of companies that you would like to invest in as well, and that make money over time. And that's how you make your money. Now, as for the part of index, this actually refers to the stock market index. And this is an index that it refers to the stock market index, for example, like the S&P 500 or the NASDAQ or the Dow Jones. And these are all indexes that track a group of companies. For example, the S&P 500 has the 500 biggest companies in the US. And using these indexes, we can track the stock market of a part of the world. And when we take a look at the S&P 500, this index has been growing ever since it was introduced, compared to the Forex, of course. Now, of course, you got to see it like this. An index fund also can be struck by a stock market crash as well, but it just overcomes it just fine. And then in the end, it just grows again. Just continues growing. Now, once you combine the index and the word fund, which is actually, the pooling of the money of the investors, you get an index fund. And an index fund actually just automatically invests in these companies of an index. Now, I'll tell you this, it is super easy because, with as little as $1, you may already be able to invest in such an index fund. Not that investing $1 will ever make a huge difference in your wallet, right? And just because it's so easy to invest, still a lot of people do not invest their money. Now, my question to you is, why is that? And that brings us to the next point, which is number 3, isn't investing just a risky thing? Now, think about it. I just told you about the story how index funds are. A fund manager manages the fund for you, nothing to worry about. And the moment you invest $10,000, it's, it already has a variety of stocks of companies. Now, you might be thinking, this is just totally fine to do this, right? Well, investing in stocks doesn't have to be risky at all. But as long as you know what you're doing, like, if you buy a certain stock, for example, like Google at $1,000 per share. Now, I don't know how much Google is right now, but, the moment the value of the stock goes down to $800 per share, and then you sell off your stocks, then yes, you've lost $200 per share. I'm sorry. Well, in that case, you have made a loss. But as long as you hold on to your Google stocks, you haven't made a loss. Now, in general, stocks grow in value over time. So even if you hold on to your Google stocks for a long time enough, you're totally fine. Most likely, the value of the stock will just go up again. And then at some point, it will go over the $1,000 per share price again. And the moment you then sell, of course, then you've made your profit. So why do people say investing in stocks are risky? Well, to be honest, it's actually rather simple. When you take a look at the savings account, the concept is very simple. You just put in your money, into the savings account. And as long as you leave it there, the bank can use that money of yours for their own purposes. And since you've left it on your savings account, the bank will say to you, hey man, you know what? Just because you left your money on your savings account for me to use as a bank, you know what? I'll give you an interest rate of 0.01% annually in return for using your money. Now, the bank will give you that interest guaranteed to you, 0.01%, which is super safe, but I'll tell you that, 0.01%, it's like nothing. It's like super low, and that's the crappy part about savings accounts. But as for the stock market, there's no party or anyone else telling you, we will guarantee you your returns for your money, because in the end, you're the only one to manage your own choices, to say, to invest or not to invest. That's the question. Well, that's you. You are the one to make the choice to either buy, hold, or sell. And let's say you bought a share in Google on the 18th of February in 2020. The price of Google back then was $1,500 for only one share. And as a beginner investor, you're like, ooh, am I making any money yet? And you'll be checking the stocks each and every day again to see, if the price is falling or growing. But back then, in February 2020, about a month later, the value of that Google share has dropped to $1,050 per share. Now I'll tell you this, as a beginner investor, if you see that price dropping like that, and you hear the news and other people talking about the market dropping like crazy, I'll tell you this, the feeling and the urge of that, getting like, I need to cut my losses now by selling it off. Well, that feeling is so strong that it will chase you in your dreams. So the riskiest part of investing in stocks is your own behavior. So my question to you is, how solid are you? If you want to be risk-free, well, the only thing you need to do is to have a clear strategy. But that is something that I'm going to discuss in my next video. And with this video today, you should be able to look around on the stock market and take a look which index fund is out there. Well, actually, there's a ton of it, but which category would fit you best? And, maybe take a look around at the fund managers. Maybe there are fund managers out there that would meet your criteria. Now, in my next video in this investing video series, I'll be going through the strategies on how to buy the best stocks on the stock market. So be sure to check out and look forward to that video as well. I thank you very much for watching today's video. And if you liked the video, don't forget to like that video, because that'll influence YouTube's algorithm. And of course, if you haven't become an XL Crew member yet, be sure to click that subscribe button that you see over here. And of course, the actual button is over here, okay? And of course, if you want to be notified every time a new video is released, be sure to click on the notification bell as well and turn on all notifications. Now, I hope to see you on the next video. Happy investing.